So, friends, let us continue with our quarterly two review. And today we are going to talk about one stock which has fallen by almost 12% today, that is Bajaj Auto. Bajaj Auto yesterday brought with their results, and no, it was not good so much. And no, it was missed the expectation almost 5% of what analysts were thinking. And this stock has rallied a lot. For in last 1 year, it is almost up by 178%, even 148%, sorry. Even if we talk last 5 years, it is 30%, 3 years it is almost 44%. So such a big jump was there in Bajaj Auto over the years, and that is when always a big expectation is always there with this stock. Their CEO, that is Rajiv Bajaj, told that no, this stock is going to reach 12,000 rupees soon, when almost 6 months back, and at that time it was around 7,000 rupees. And yes, it touched 12,000 rupees. And then he has given a next target of 20,000 rupees. Now that is what is the FOMO factor created no by the CEO, and everyone was thinking, "Arey yaar, ye to bhagega, 20,000 touch hoga." Everyone started buying with the greater expectation, and the result is not coming as per their expectation. So what has gone wrong for this stock in last quarter? Let us talk about that. So the main reason, one of that was the festival season is not going on great. That is what management told. The festival season expectation was that around 3 to 5% growth will come, but it is coming around 1 to 2% only. Again, guys, before I go and talk about more, guys, hope you are liking our video. So do like and share this video to everyone, and do subscribe to our channel. And if you have any question related to any stock, please put it in the comment box. I'll try to take it next time for sure. So coming back to the Bajaj Auto, as I told you guys, the festival season not going on well, and this is what is impacting the stock currently. If you talk about the overall, what another bigger problem for Bajaj Auto is that profitability is down because the revenue mix is not so great. Revenue mix में है ना क्या हुआ है कि more EV sales and CNG sales has happened, and export sales. Okay, so currently, if you talk about the domestic sales, there they increased the average selling price by 5%. And for the export, it is actually reduced by 9%. And that is what is bringing the revenue down. Overall, if you talk about the total revenue, 51, I think it is around, yeah, 51% is the domestic sales, 32% is almost your export sales, then around no 15-16% is around your three-wheeler sales. Okay, I'm talking about two-wheeler is the major one, which is almost, you can say, 85%. So now if your export average selling price is going down, it is going to impact the market. Now why export selling price is going down? Because in the Africa country where the maximum export is happening, there the inflation problem is there, and also the no geopolitical crisis, whatever is happening, is actually impacting the stock price. Sorry, ASP, average selling price there. Domestic, it is doing well, but now when we talk about the product mix, in the product mix, if you talk about no 51% is almost the, you can say, the domestic two wheelers. Okay, and in that also no the premium brands, whatever they are having the maximum share, what is almost 31-32%. Electric vehicle is almost 5.6%. Okay, now electric vehicle scooter sales has happened a lot. Now when we talk about electric vehicle sales, no, overall if you talk no, that is actually gone up by almost 72%. And because it has gone up by 72%, no, the average selling price of electric vehicle is of course on a higher side, but the margin is always low, and that is impacting. Okay, even the CNG 125 CNG target, actually no, this also is a big success, where the CNG and petrol mix is there. There's a new entrant, and there also the margin is lower. So these two are actually bringing the margin lower, and the premium segment, Pulsar and all that, is not going up so much, which the expectation was, and that is why the margin is coming on the lower side. Okay, when we talk about the Bajaj Auto no position currently among the no big players, Hero Honda is almost, you can see, Bajaj Auto is 17.2% currently. Actually, it has done well compared to the last quarter. Last quarter it was around 16.8. Hero Motocorp is almost 42%. HMCI, that is Hero Motorcycle Scooter, that is around 17%. So slowly and gradually, Bajaj Auto share is increasing, but not at that level the expectation is. So overall, if you see here, the problem is that mostly the export segment, which I told you in the Africa region, all that, there the because the average selling price is coming low, the margin is coming low, and of course the EV and all that. Now future mein kya hoga, this 5.2% share which I am talking electric vehicle, it may go up to 10%, 15% in future. And if it goes, of course the margin will go down, and that is what the analysts are thinking ki yaar, whether this type of margin they'll able to sustain in the future or not. The net sales has gone up by almost 21%, even the EPS has gone around 21%. But whether this type of EPS again growth will come even though revenue goes up, that is what the question is. Unless the revenue go up very drastically up, then you can compensate with the margin front. Okay. So keep this in mind. Again, guys, when we talk about some of the decline in the employee cost and all is coming, staff cost decline by 10 or 20%, because of the salary and all that, leave encashment, rent, retire planning, that has gone down. Again, this is one of the reason why the expenses are a little bit down, which is help over margin to sustain. Again, overall, guys, normally Diwali festival, everyone was thinking that two-wheeler will give you at least CAGR of almost 6 to 7%. But that type of CAGR is not there. Again, the expectation is there that no, in future also the CAGR will be all on the double digit for next 2 years. But if this type of response is there, then you may see a lesser CAGR, and which may impact the future earnings. And this is where the analysts are thinking whether this type of sustainable sales will be there or profitability will be there. See, guys, this company has performed extremely well. Okay, this company is having a P ratio of more than 40%, 40 times, which is quite good. But overall, if your sales is not coming out, your margin is in a shaky, then P may contract. So even though your EPS goes up, but P contract, that will have a negative impact on the stock. And overall, if the EPS may not go in that way, then indirectly it will hit your basically the stock price also. So these are the various combination. No, basically this is why no analysts are thinking, or you can say the investors are thinking that the great times for Bajaj Auto currently it is not there. Now even what I think that yes, current position is not so great. If I take into consideration all that, maybe 1 or 2 quarter we have to see whether the Bajaj Auto is going to again come into terms of increasing the profitability or not. But yes, I do agree current situation may be tough, but in future, if they are able to work on their margins, and of course the domestic after the festivals again it picks, then I think it is again in a game. But 20,000, what Rajiv Bajaj was saying, I don't know when it is going to come. Again, see guys, this is what you have to do an analysis. You have to see product wise, where the segment is, then where the profitability is coming, which are the main product profitability, and that is how you have to analyze. And this is what the same thing we are doing when we give a stock recommendation services to our members. If you want, the link is given below. Do check it out, guys, and you can attend our next session for free. Also, the link is given. Do attend that. It will be a very, very informative session. So hope you like this video, guys, and thank you very much for joining. Do like and share this video to everyone, guys. We are putting lot of efforts, and we are trying to bring as much as no, you can say the performance review to you so that you can take a better decision. Okay, so thank you very much for joining. I'll see you soon in the next video with another stock review. Bye bye.